All right, guys, so we had a great discussion about buying stocks like Tesla and also selling stocks like Tesla after a huge run up like we just currently had. And honestly, guys, the conversation is confusing and it can absolutely destroy you as an investor if you get it wrong. I mean, last year, if you just waited to buy Tesla, it just kind of fell and then fell and then fell. And then this year, it was basically on like a rocket ship straight up. I mean, every week it just seemed like it put on another 10%, another 10%. But now we've basically stagnated, which of course is a very scary proposition because you're kind of in that no man's land, right? So basically, do you buy because it's definitely going to 300 or 400 as they continue to just execute and just crush it and just knock it completely out of the park? Or do you actually wait because anytime for the past year, anytime Tesla stagnated, it basically stagnated and then fell. And guess what, guys? It fell epically when it decided to make those next legs down. So let's kind of discuss all that today. And I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. Don't forget, the March Madness sale ends tomorrow for my group where you get to learn exactly how to do evaluation. See all my buy and sell alerts in real time, my watch list with price targets. I got 5 free courses for you to take, the best Discord group out there, just a ton of content, a ton of videos, a ton of everything in there. And you get direct access to me too, and honestly, a ton more. And I know I've said a ton a lot, but just check out the pinned comment down there, see everything that you get and see if it's right for you, and make sure you take advantage of that sale before the price goes up. All right, so kind of back on track here. What exactly do you do in this particular scenario that we're in right now with Tesla stock? And honestly, you can apply this to any stock. We were talking about several different stocks in the group, basically, applying it to a lot of different stocks as to, hey, what the heck do you do in this type of scenario? It's really hard to buy when you've had a, 50, 60, 70, 80, 100% run up in a stock in a very short period of time, especially when you could buy it so cheap before. And oh, by the way, in this type of market, man, there's a lot of stocks that have had some really nice runs that just got crushed and made new lows just a few months later. So it makes for this very confusing situation where you feel like you want to buy, but then you don't know whether you should buy or not. Maybe you should sell and wait and see if it falls again. I mean, it's a really tough decision there. So let's kind of talk through all the different, avenues that you have here and how to handle it. And then I'll let you obviously know what I would do as well. First, you could sell and see if it goes lower or not. Now, you guys know me. I'm not about selling stocks for absolutely no reason or trying to play market timer or trying to be a trader or anything else like that. I'm a long-term buy and hold investor. So for me, I'm not selling a stock unless something fundamentally changes with the business itself. Now, I completely understand the charts may be pointing to one thing. Maybe you are a trader out there and that makes sense. Maybe there's a lot of other things working for you individually that I don't understand. It doesn't necessarily fit with my plan or anything else like that. But in general, if that's what you're looking to do, you just need to understand that you are now actually trading. So you need to have something more than a feeling to make a good decision in regards to that trade. And 2, you have to understand if it doesn't go your way and the stock doesn't go down, you're in trouble because now you're going to have to pay even more for that stock to get back into it if it indeed is the rocket ship back up that we think it may be. I'm not saying it is. I'm not saying you got to, plan on that or anything else like that, or that I'm planning on that. But that's a decision you have to make. And then if it is going to come down, how low before you actually start buying again? I mean, are you looking to buy it at, 160, 140, 120? Do you think it's going under 100 like some folks did, basically at the beginning of this year that were screaming up and down, it's going to go to, 80, 60, 40, whatever the heck the number was. I mean, do you have that sort of conviction to just wait and see when those numbers come? Because I can guarantee you, you may make the right call to sell at 200, we'll say, but if you don't get the entry point right on the bottom, it's useless. You didn't complete the transaction. That's why I don't trade, because it's a twofold thing. Now you got to be right twice. I only got to be right once over a period of years. But in this type scenario, you've got to be right twice. You've got to sell at 200. Hopefully it falls down. And if you decided, hey, obviously if you're selling at 200, you bought at 196. I mean, what the heck are you doing there, guys? I mean, that's like computer algorithm trading or something like that. But if it actually does fall down to a reason, I mean, are you gonna pull the trigger at 180? What do you think the noise is going to be if Tesla falls down to 180 or 160? I mean, it's going to be, oh man, just wait a little bit longer, because that's what happened last year, right? It just kept falling and kept falling and kept falling and kept falling. And now you're in this perpetual state of not buying. And then as it comes back up, a lot of folks at the beginning of this year when it was 100 didn't want to touch it, weren't buying it because everybody was screaming, don't buy, run away from Tesla. And it just continued to rock it up. And then it was like, hey, it's got to come back down, guys. It's got to cool off. This is just a bear market run or rally. Don't worry about it. And here you are. Now you're stuck at, almost a double up trying to decide, do you buy it again or not? And that's a tough spot to be in. And trading sometimes can get you in that sort of deal. So you've got to have a plan and understand that if you chose to buy at 180 and it drops down to 160, how are you going to react? You're going to feel bad. You're going to feel like, oh man, knew I should have waited till 160. It turns into kind of a guessing game there, and you're never going to be right in the end. Hindsight is always going to be the winner in that game. So for me, that's just not something I'm willing to do, not the game I'm willing to play, but that's kind of is an option there on the table for you in regards to what you can do. The second thing you can do is just buy right now, just basically go all in and hope that it goes up. I mean, that's definitely a strategy a lot of folks used back in 2020, right? I mean, there was no fundamental analysis going on. There wasn't even technical analysis going on half the time. There wasn't any analysis going on at the time. It was just kind of a, yeah, you buy the stock and it just goes up 50%. That's just what happens, right? Hope is not a good strategy there. If you're willing to buy, we'll say Tesla, for example, and you think it's going to be a, $400 stock in 3 years, whatever the case is, and you're willing to just buy it and not care whether or not it falls down to 180 or 160 or whatever the case is, then okay, that may not be a bad strategy there. But a lot of times, a lot of folks just want to hit home runs repeatedly. I know we talked about it in another video. We talk about it almost weekly in my group, to where investing is not about hitting home runs. Home runs, Warren Buffett, has like the slowest home runs ever. He doesn't 10x stocks in a period of months or years. It's decades. And then he has multiple 10x's, but it's over the course of decades, not over these very, very short periods of time and such. And a lot of folks are trying to hit home runs or playing the lottery with their investing. They just want to dump a big lump sum in right now, buy, and then hope it goes up. And let me see what happens here. That's not investing. That's, basically playing the lottery and such. So for me, it's not a technique that I would use that I necessarily agree with and such. Now, I'm not saying it's right or wrong or anything else like that, but it's just, to me, there's a better way to do it than even that. And so let's discuss that next. Let's discuss exactly how I would handle this situation. And I'll give you guys some examples. I'll walk through my example. I'll walk through other group members that we have example. I'll walk through all that sort of stuff for you. So that way you have multiple points to kind of look at and consider. And I'll be honest with you guys up front. I don't think you should do any of the things that I said there. I think you just need to use these as examples and get out there and kind of create your own scenario that you think would work for you personally. For all this, with any stock that I look at, I simply zoom out and look at the stock. One, that gives you a lot of perspective in terms of where the stock is historically, what's happened, what's going on, how far has it really fallen, things like that. It kind of gives you that perspective of, hey, I'm not only looking at what's happened short term, what's going on right now with the charts or everything, I'm looking at it long term. And then I'm looking out 3 to 5 years and thinking, where do I think the stock is going to be? Where's that net income going to be? Where's that revenue going to be in 3 years? Model that out. Easy to do. You can take that, look that out, and look at that stock price, and then come back to my stock and go, okay, hey, the price is, cheap relative to that future value that I think they can achieve. Now, the next thing to do is do a valuation. Am I overpaying or underpaying for this asset there? So you've got to, after you kind of pulled back and kind of have the long-term chart out there, figure out where undervalued is and then see if you're undervalued or not. And then the final stage in that is, once I understand where undervalued, or at least where fair value is creating a buying plan around that number. Now, that doesn't mean you can't buy it when it's overvalued. As a matter of fact, one of the best strategies to implement, where you don't really need to worry about any of this sort of stuff, is just to do a simple DCA. It's almost impossible to beat a DCA in a great stock over the long run. But you can also take a look at, hey, when it's overvalued and undervalued, you can definitely look at putting more or increasing your DCA when it's undervalued territory, and kind of slowing that DCA down a little bit whenever it's in overvalued territory. So that way you can kind of, be able to kind of alleviate that deal. And I won't say cheat it a little bit, but definitely kind of, putting in more when it's beaten down and a little less whenever it's, kind of riding high and such, because you never know where these things are going to run up, and you never know how far they're going to fall whenever they do eventually fall the opposite direction here, right? Wall Street always over exaggerates to the upside and to the downside. We can just what they do. I don't know. Wall Street gets silly. They get crazy. They want to exaggerate everything. So that's exactly what they do. So for me personally, I get that valuation there. I figure out exactly where fair value is, and then I kind of look at it from there. In the case of Tesla, I have all the Tesla shares that I want. I don't need any more Tesla shares. I only want to buy more Tesla shares when it's undervalued. And I don't just want a little bit of a discount. I want a lot of a discount. A lot of a discount. I think I said that right. I don't know if I did or not, guys. Sorry. Anyways, the point is, I want a big discount because I already have all the shares that I want. If my Tesla position never grows again, I'm very, very happy with my share count and what I have. However, having said that, all stocks go through overvalued and undervalued periods, and companies that continue to perform, I want to continue to put my money there, regardless of how large my position size is. I don't care that Apple's my biggest position. Don't care. Could care less. I'm going to continue to buy Apple when it's undervalued until they quit being a great company. That's just the bottom line with that. Tesla to me is a great company, and right now it is undervalued, so I'm absolutely looking to add shares. But I don't have a need to just, do a DCA or anything else like that personally, because I already have all the shares that I want. So I'm waiting for those undervalued opportunities, and I'm okay with waiting. I also know that, man, it's undervalued. Really, honestly, anything under $200 is a steal to me for Tesla. So I wouldn't feel bad if I did add shares right now. I've been focusing on other stocks and such that have fallen into that significantly undervalued territory where I don't have as large of a position yet. I'm still building out those positions and such. But in regards to Tesla, that's exactly where I'm at. Now, we have other members who basically do all kinds of different strategies, right? They do a DCA. Literally, they get paid. X amount of dollars comes out of that paycheck, goes directly into their brokerage account, and then they buy X amount of shares of Tesla and X amount of this stock and X amount of that stock. And they do that every single paycheck. Don't care about the price. Don't even look. Doesn't matter. That's what they're doing. We have other members who do a basic DCA. They do that exact thing basically when they get paid or whatever the heck schedule they have. But then they also keep a pot of money on the side for significantly undervalued times because Wall Street's going to get stupid sooner or later with a stock that you really, really want more shares of. And so you execute your normal DCA until that time, and then they make large chunk buys after that. And that's another great strategy to kind of just allow you to add whenever you know it's significantly undervalued. And all this can happen no matter what strategy you choose to implement. Mix mine with somebody else's, do a straight DCA, whatever the case is, all this is made possible because you've done a valuation in the first place and you're looking long term. You're looking out that 3 to 5 year range. If you're not doing those things, this becomes infinitely harder. And then you are at that crux point where we are right now with Tesla stock, where the emotions are taking control, right? You're basically going, oh crap, what if it runs up? You immediately feel FOMO if you start thinking about Tesla going to 250, 300, back to 400 maybe even, in the course of 6 months. That definitely makes you feel like, gosh, I just need to buy it now. I can't do it. It's called FOMO. We all have felt it. You'll feel it again. It will continue to come up. And same thing, we've all also felt this past year where it was just like, oh, give it time. Yeah, Tesla's on a run. Cool. It's coming back down. Just wait. Oh, and by the way, it's going to crash spectacularly. That's exactly what it has done its short-term track record. It keeps doing that until it quits doing that and it goes on its next bull run. So you're stuck in that ever, circulating fear of either FOMO or fear that I'm going to buy and then it's going to crater down and then I could have gotten a lot cheaper. And that to me is where you're pulling back. Yeah, pull back in the first place. 3 to 5 years, is it going to be cheap now or not? The idea behind all this sort of stuff is not to worry about your average. And I'm not saying there's a difference between a good average and a bad average, but a lot of folks are afraid to average up because, hey, would you rather own, 100 shares at, $100 per share? Would you rather own 1,000 shares at $200 per share? I know which side I'd personally want to own, but a lot of times that's very, very hard to average up in a stock, especially when you were buying it. I was buying Tesla at 103. It makes it very hard to buy at, 187, 197, whatever the case is, whenever you were able to buy at, 103. There's a big difference between those two and such. But again, pulling out, looking at your valuation, viewing it all with that long-term lens makes it a little bit easier for me to execute to my plan that I made without emotions, without those what-if scenarios already built into what would happen, how would I feel, and all that sort of stuff. I've already built all that sort of stuff out. So that's exactly how I would handle this particular scenario with Tesla. And, like I said, guys, experiment with it, go through it and such, play around with it, figure out what plan works best for you, but make sure you're doing those baseline things. You got a plan, you're doing evaluation, and you're looking long-term. And at that stage, you can create the plan that works best for you. And if you don't know how to do any of that, make sure you check out the pinned comment down there and see if my group's right for you. Again, we're willing to help you through all of it, guys. It's a ton of fun. We go live all the time. You can jump into my DMs. There's so many things that we can do and so much help that goes on in the group there and such. That's really the biggest benefit there is the group that you get, not just for me. It's not just me, guys. We got tons of smart 6- and 7-figure investors in there that are in there diving in, helping folks with all these things. So that's really the benefit there. And check out the pinned comment down there and see everything else that you get with it. And click here if you want to see the 3 stocks that I'm buying now. And click here if you want to see my exact plan for all those stocks. So thanks for watching, and we'll see you in the next one.